Hello, everybody. It's Friday, January 24, 2025, and we're going to have another of our shows, uh, the status of the market with power law indicators. Okay, so let's dive in. Want to try to be very focused this time. Um, kind of did okay last time. It was only 1 hour. Let's see if we can do 45 minutes this time. So, in order to do that, we are going to make the assumptions that people are familiar with some of the concepts of the power law. You can watch some of the previous episodes, where I introduce some of our methods and the way we look at the market. But basically, we develop these indicators. Right now, we have about 12 of them, and they are all around, the concept of a power law, that is basically this scaling behavior that we see about there. In the order of magnitude, the Bitcoin has been super um, coherent with this growth. I just saw a post from somebody else. I think he's a mathematician too. Um, he's not Fred, but he was showing how one of the people who work around the power law, his name is H.C. Berger. He kind of tried to popularize the power law. He made a post about 6 years ago. The price of Bitcoin was around 10,000, and he made a projection for several years ahead using the same parameters that were used six years ago. You will make a prediction for today's price based on the power law itself. That price is around, something close to $100,000. So we are off by a few $1,000s. Um, the values can be slightly different according to how much data you include, etc. But you can see, in fact, that so this is a period of time I always show here where the power law came out. We observe power law behaviors in Bitcoin price between the price and addresses, transactions, and price since 2012. But the particular power law that everybody is familiar with is price versus time, has came out officially in 2018, and this is the time that is illustrated here, right? I need to stretch it even more. You can see, in general, even with the ups and downs, even with the last uh, bubble, we have followed this path, right? Sometimes we are below, sometimes above, but the general path is there. In fact, right now we are very close to that line. So it will have been a pretty good prediction when the price was $10,000 around this region, make several years ahead, 6 years, to say yes, the price will be around that value in 6 years from now. Anyway, so it's we use it as our reference point. We add components to the general trend, that is existence of this periodic bubble. So you can do it in different way. I think the best way, in my opinion, is to point out to the cyclic nature of these bubbles. So when I draw them in this way with this blue line, they are not supposed to replicate perfectly the shape of a curve, right? First of all, it's not easy because it's kind of, they are supposed to be exponential, but not quite. To have, period of time when the price is flat, then it goes up, and then sometimes we have double bubbles. It's mostly about indicating where the periodicity happens, right? The peak seems to be aligned at happening at similar times, and also kind of a range of a height, right? but again, it can be calibrated using the first bubble. And then there is a very precise decay that is also a function, a mathematical function, and so you can use it to extend it and predict the next bubble, where the next bubble is. So this is our understanding of the price and how to think about it in terms of the oscillations that are basically deviations from the trend. Our approach is also to basically think that these patterns continue to repeat, and then compare what is happening at the moment with what happened in the past, that we can see in a moment. So what is the general picture right now? So using this set of indicators, everything seems okay in the sense that we usually spend 2 years close to the bottom. In this particular case, we left it because of ETFs. We many times actually ask what was going on here, why we left it here, because you see usually we are supposed to stay close to the bottom and then leave a bottom at a precise time. And a few days ago, somebody posted something about China selling a bunch of coins, and they show a chart where there was a very clear link between this event and a particular event that I mentioned, that we can mention in a moment in another chart I will show you. So there are local events basically that can affect the price and push it away from where it's supposed to be, but then it always corrects. So that is our current understanding. One way of interpreting what is happening with this particular cycle, it's in the light of that usually, like if there is a theory, if there is let's say a key to understand all the different components of the cycles, is that we follow the power law unless there is some particular event that pushes the price around. Then we leave it for this cyclic event that seems to last about 2 years, independently of how it happens. It seems that this is the regularity that we observe. And until we have evidence that we're not following this pattern, we continue to accept this approach, this interpretation. And so one possible key to understand how this is developing at the moment is that we kind of left the bottom early. We touched the power law, and then we had a correction. But the correction, differently from the correction that happened last cycle, that brought us all the way down to the support because of COVID. This was COVID. It was like a big resetting, right? We didn't have a resetting of that. We had a much milder correction. So in a sense, we are already there. This is how I will describe it. We already made a lot of progress towards the bubble behavior. So if it doesn't look very active right now, it's simply because, in a sense, we are ahead of time. At least this is a possible interpretation, that we are ahead of time. We were supposed to be much closer to the bottom. So, for example, look at what happened in this cycle, right? So we were much closer to the bottom. We jump a little bit up. This was, let's see, let's go to the corresponding time. This is basically the end of the year. So the end of the year, so this was the first year, and we had the end of the second year that was here. And yeah, we started to go up, right? But it took longer time before we started to see real bullish behavior. Okay, in fact, all the way in April. Otherwise we stayed much, much closer to the power law. And so way to explain why it looks like less exciting in a certain sense. First of all, we do expect to be less exciting in general because of the volatility associated with this bull run will not be as big as the previous cycles. That is part of our thinking and what the data seems to show. But it looks even slower than what you will expect by volatility that is reduced because of a general diminishing returns. And I was thinking about that for a few days, and I think it could be explained in that way, right? That because of ETFs, we push it far away where it was not supposed to be, and then we had a correction, but the correction didn't bring us all the way there. Now, this could be an interpretation, right? It's difficult to take 100% seriously this interpretation because it's not that we had a many examples that we can compare. We have few examples, but given what we know, this could be one thing. Otherwise, we enter the bull run, like I mentioned many times. Right, one of the way we know when the bull run is through this clock that so in our understanding of the cycles, we use 12 as the end of a year when we had the bull run. That is our 12. 3 is about 1 year later when we have the bottoms. We have this transition, so it is basically, it's not a big deal. This number 6, nothing really special happens, but basically we transition from, it's 1 year anniversary in a way you can think it. I'm not using halving. I know halving happens here between 6 and 9, but I don't find it useful to measure things from the halving. I prefer doing it in this human time, if you want, associated with this clock. 1 year from the top, bring us to the bottom. 1 year later, it's basically 1 year anniversary from when we left the bottom. We are still going up, right? It's not that we don't do anything this year. Will be very bullish for most assets, but we are so used, to the bull market during the bubble that we don't think about these as bullish behavior, right? And then another year, other things happen. Usually, we stay close to the power law, the support power law, and then we leave, right? But we did it early, basically kind of 1 year after the bottom, like in January of last year. And we spent most of the year going up. In March, when we had a correction, it seemed we are just oscillating back and forth, all the way down to 55K. Then there was the price went up again, and we went above the power law. And around November, I say, because usually it doesn't have to be perfectly at the end of the year, it can be a few months later. So because of everything together, the very aggressive growth of Bitcoin during the time, I say, okay, I think this is the beginning of a bull market. And I was right? And then another important milestones in knowing we are in the bull market is when we cross the power law. And we stayed above the power law since. It is a good sign, but was basically the beginning of November. And then we kind of follow it, right? We kind of follow it. There were times where I was thinking we were going to leave it, because the bottom line, again, it depends where you measure it, right? If we are already there at the power law, we have about 1 year of time to reach the top, and our projection, like always, is about 200K for the top, and this is based on the decay of the peaks, right? So if you take the peaks and you check out the decay over time, they seem to follow a pattern. Now, we can discuss this in a moment because I have a couple of things to say about what it means to find patterns, right? It's not just connecting random dots. Connecting random dots is not it. It's not what we do. This connection of dots needs to be meaningful. Not all connections of dots are meaningful, even with relatively smooth curves. Somebody was pointing something like this to me. Oh, I'm connecting this with a smooth curve. Okay, fine. There is always some kind of a smooth curve among a bunch of points. It's mathematically proven, actually. You can always connect dots. That connection, simply because you found a relatively nice curve through these dots, doesn't mean that it has any significance. It has to have other elements to be significant. Anyway, so we are above the power law. We're following the power law. Seems very closely, too closely. I was saying, for a real bull market, we need actually to do better than the power law. We need to go faster. Right now, like I say, because maybe we are already ahead of time from where we are supposed to be. If we didn't do this early climb, right? We early leaving the power law. It's okay. It's not too worrisome. But eventually, we need to do at least twice as good as the power law, because if we need to reach this 200,000, let's say this 200,000 is a real possible target. If we are following the power law at this particular point, the returns is the price today over the price yesterday, right? It's a ratio. So 1.1 will mean 10%, 1.01 1%. For the power law is 1.00201. That means 0.1%. This is due to theoretical calculations. I can show you one of our indicators. It actually shows that the decay over time. There is a decay over time over returns, right? If you extrapolate that 0.1% a day, you get something close to 42%. That is your annual return. And for doing better than the power law, for reaching that 200K, we will need to do twice that, 0.2% a day. And so if we stay along the power law, in 1 year, we will be around 135,000. That is still amazing, right? It's still in just 1 year doing another 35%. It's not bad at all. But it's not going to look very bullish in the year when we are supposed to do much better than the power law. I mean, I will not complain. I think it's still nice gains, very good growth, but it's different from whatever had happened before, because even including the decay of a peak, we should do better than that. In fact, the way we calculated this peak was adding about 80%. So we are supposed to do 80% better than just stay on the power law. Okay. But like I say, we have time. We have almost 1 year of time, and it's possible that Bitcoin is just consolidating above the power law. It's pretty bullish behavior, and then there will be some catalyst that will push the price higher, and we will still go there, right? Now, we are going to go even faster and need to go even faster if another month or a couple of months pass by March or April, if we continue to follow the power law, or maybe even correct, and go below the power law, I will be a little bit worried, right? But right now, there is no reason for that. We can look at other charts. Like I said, this is the clock that shows the different areas. Basically, it's like this clock that many people have seen before, but here we are showing the oscillation, the sine oscillation of the clock. And right now it looks okay. It looks healthy, right? We are here. And it's just the beginning of this path. We are supposed to peak there. All right. And this graph shows the deviation from the power law. And this is actually, if you look at this graph, this is how we derive at 80% deviation. We do the calculation, in a more precise fashion. I wrote an entire article on how to do that. You can find it on my X. If you look for my article, it should be one of the tabs for my account. What this graph shows, basically, we are looking at the deviation from the power law. The center will be the power law. Then you have a data points that are below the power law and above the power law. And you can see it's a clear bimodal pattern, right? And when we are deviation from the power law, like here, that are not happening at the right time, there is always a correction, right? So there was 1 year. This was a correction that happened just after the when we crossed the power law, the price corrected, and then we went back to that regime. So anytime there is a situation like here where we cross, then it doesn't stay there for long. It goes back to the correct regime. Same thing here. It was like kind of oscillation back and forth. We wanted to go back to that regime that is the correct one. This regime that is below the power law for 2 years and above the power law for 2 years. And now, this is, it looks like it's not a temporary thing. We cross also because it's the right timing, right? This was not the right time. You can see here. This is why we align all these indicators, because it's a good way of comparing all the different information. Here, we're not supposed to be above the power law. Here, yes, right? And this is why this is a good sign. But the idea is that if I zoom out and I show you the peaks, right? So is this the correct peak? Is this the correct peak? Seems actually the line went through both peaks. But and this is what I was telling you before. It's not just a question of connecting dots, right? Oh, okay, if I do it through a straight line, for example, it's a very strong requirement. And in terms of the significance is in a log linear chart, right, where I take the log of in this case are deviations from the trend. It's price minus the power law trend divided by the trend. So I'm looking at these deviations, and they seem to follow a precise pattern where the top goes down almost in a predictable manner, right? We don't know why that happens, but it's another regularity we observe in Bitcoin. It's not an arbitrary thing, because a straight line has very strong requirements, right? It's not just some arbitrary curve. And in a log linear chart, it corresponds to an exponential. And exponentials are this type of curves like power law that appear often in many phenomena. It's whenever there is something that is decaying with time, many times is an exponential. So this is why it's interesting that it's an exponential and not an arbitrary curve. And so you can use these, the slope of that exponential, and then extrapolate, if you have a particular data, how high that deviation will be. We kind of try to recreate this visually to show you, we don't rely on this visual fitting. We do the correct fitting using regression and so on. But by doing it by hand, you get a relatively okay result. And it's basically a demonstration of how this works, right? And so, given that we think the peak, if we have a peak, and if everything repeats like before, it's going to be Q4, and so you can go around that time. Now, of course, it will be always some kind of a range. Think this always like a box, right? It's not really a single line, but it's like a box that, in theory, I could draw. But this line, it's a simplification, right? So a particular date. If I go to that particular date, and I'm going to use my cursor to read how big the deformation is, how big the deviation is, it's close to 80%. You see, I get kind of that value. I'm not doing it perfectly because, like I said, this is done by hand. But when I did the theoretical calculation, I got 80%. So then you use that and you say, okay, so this is how I get my 200. I go and look at the price that is predicted by the power law alone, that is about 135. I add 80% of that, and I get 200, close to 200. And this is how we do it. So this chart is showing this. This chart contains many different ways of representing the deviation from the price, from the trend, sorry. We can do it relative to the price, relative to the mean. One of it is really cool is this one. It is with the K adjusted. What is good about these, let me see if I can restore it. Yes, but if I take the decay and I correct for it, right? Basically correcting it in this case means you just divide by the decay, and then it disappears, right? So the large deviations that we saw in the beginning, this bubble was about 15 times away from the trend. This one was more like 10, this was more like 5, 3, you know, by including the decay, then all the peaks are similar. And it's nice to look at things in different ways because you can learn different things from different methods. So doing it in this way creates some kind of an index from 0 to 100, because then we can recalibrate it in such a way that 0 is the bottom, 100 the top, and you can, because it's humans like, whole numbers like that, 0 from 100, and you can kind of give a number to where we are at any particular point. So in this case, for example, we are 74. There is still room to grow, right? We are not yet where the peak is supposed to be. That is more like 100. Again, these are under the same conditions, that everything repeats like before. But see, again, this is the end of the year. We are supposed to go up all the way there and then peak and then go down, right? If everything repeats itself. This indicator, it's a specialized Earth indicator that was developed specifically to understand Bitcoin. It's based on the particular properties of Bitcoin, and the purpose of this indicator is to show, again, different regimes. In this case, what matters if we are below or above 0.5. If we are below, we are going to see things similar to what we observed during that period when we were oscillating back and forth. We called it the 55K gang, if you remember, because we were going high and then down, we are oscillating. That type of oscillating behavior, that is called mean returning behavior, gives it can be detected by this Hurst indicator by having value below 0.5. You can see, in fact, that was the case. Then when we started to go up again, we have a turning point. Then it started to recover and it went all the way above 0.5. And we are still there. And that basically saying we are in a trend following pattern. So this pattern of going up, even if it doesn't seem we are going up a lot, it's supposed to be there, right? Now we are bending down a little bit, but so far so good, right? We are still following. We are in this trend following regime. So this is the purpose of this indicator. I have this indicator here that is called the bimodal. That is one of our most recent indicator. What this does is separating these two modes that I described before, but you can see even from the deviations. There is what happens below the power law and above the power law. And we spend about 2 years in each regime. And I was, remember I was telling you that we could have local event that push the price away from the proper regime. Here, this is what I was referring to before, that Chinese selling Bitcoin, we were confiscating it around this event. So around this time, it was somewhere in mid 2019. It was one of the many events, right? Like Bitcoin is full of different bans and scams and rug pulls, right? All kinds of different things, and Bitcoin always survives. And these events can affect locally the price, right? It can happen. But then the beauty of the power law, the idea behind the power law, is that it will correct itself and we are still following the general path. And if anything, these events are, kind of exception that confirm the rule. Even this one that is COVID, right? You saw that was a big correction. We reached the bottom of a power law, and then we bounce back. In this case, we went the other way around because so when many times they say, oh, there are no supply shocks, give me evidence. Maybe this was an indirect evidence for that, but actually it supports my thesis that in the long term, if there are supply shocks, or the supply shocks don't have to be real supply shocks. So for example, in this case, these scammers were taking away many coins from the market, right? And so maybe that could have been because of this push up, or maybe people like the scam and they join the scam and they creating some kind of euphoria or whatever, right? So these events can change the price locally, then there is always a correction, right? That is the idea. And so here, this was associated with this event. In the previous cycles, we were much closer to the almost like textbook behavior that I'm discussing, right? I think this around these 2 years, we are supposed to oscillate along this dark line. So basically, this dark line is where most of the price is. Not even the bottom. Bottom is actually kind of an extreme. We reach that extreme. We are too far away from where we are supposed to be. That is the dark line. That is a real power law in a sense, right? And then because the deviation is too big, we need to correct upwards, right? Same thing here. The deviation is too big in the other direction. We are too far away from positive point of view from the power law, and then the price goes back to the mean, to the original position. In fact, during this time, if you look at the Arst coefficient that we just discussed, it's usually below 0.5 because it's mean returning, very strongly mean returning behavior. The time when the Earth coefficient is above 0.5 is usually here, because for 1 year we are very, very steady and we are leaving the power law. So we are now mean returning during that year. We are leaving the power law and we have trend following. So everything is consistent. This is why we use so many different indicators, because we are trying to have many different angles. It's almost like you're basically when you go to the doctor and the doctor asks for a blood, we are trying to understand you. So we do a lot of different tests, right? We do a blood test, we do an MRI, etc. So all these indicators are like all the different analyses that we apply to Bitcoin, and they need to be coherent, and they are. And so even here, right, when this was more easily to identified, that has to do with the cash infusion due to the ETFs, the FOMO associated with it. We reach a particular value. It's interesting. We could have gone much higher above the power law, but we didn't. We kind of stopped there. Call it coincidence. Maybe it was not. But again, it was a large deviation from the general trend. There was a correction. And then there are these transitions. What is missing in this graph is showing the transition area. Maybe we can use yellow or something. But you see how sharp they are. Usually we don't spend much time in these transitions. And it's almost like a switch. We switch from one mode to the other mode. Now, this color coding here indicates the volatility. So how much we deviate from this average behavior, and it's more symmetric here. This is why mean returning, and it's less symmetric here. Basically almost this blue line creates some kind of a barrier where we don't go below that. Then the deviations are much larger when we are above the power law. And this kind of explain why we have these bubbles, because the volatility is so big that large deviations are common. But by the time you go to these dark areas that are about 2 standard deviation, again, the price needs to correct. It's too far away. So this why we had a major correction here. The price was going away, was in this darker area, needed to correct, because usually we don't go farther than that. Same thing here. And, in the past, the volatility was much higher, and this is why we could have much larger peaks. Most of the differences between the peaks can be explained by volatility. Not all of it, but the majority of it. And in terms of what is going on right now because we are trying to understand the market at the moment. We clearly enter this area because it needs to be sustained, right? It's not just for a little bit. We are basically since early November in this regime. Everything looks good. Again, seems that this blue line is almost like a barrier. We are kind of oscillating around it. But if we repeat what we have, the previous cycles behavior, very soon, I will say if you wanted to give me a date, no later than March, no later than March, I want to see some strong bullish behavior, like, this basically exponential growth going up, even modestly, like twice as what we are doing right now. So 0.2% a day, it is about 6% a month. We should go up every month 6%. Now, by the time we reach March, it will need to do, I can recalculate it, we need to do a little bit better because this is what we need if we start it now, right? So let's say we continue with the power law, then we will need to do better than 0.2% a day. Maybe 0.25 or something. We can calculate it. But then, bullish behavior similar to this, not necessarily this steep, but basically like a straight line. In this graph, straight lines are exponentials. Something like an exponential line, behavior going up and reaching 200,000. Because more and more time passes, more difficult it is to reach that goal. And without talking about, 500,000, million, that other people are claiming we are going to reach this cycle. It's going to be more and more ridiculous. Now, one thing I wanted to show you, let's try to do in the next 10, 15 minutes. So we will reach the 1 hour discussion. And it's also a little bit of good news is the liquidity. So this is what happened. Again, people that have followed me over the months know this discussion because I repeat it so many times. But basically, I created this indicator. It's now strictly a power law indicator, even if it is related to it. Basically, I look at what is called global liquidity. So there are different measures of how the money moves, like large sources of money, like some of the biggest banks, the different M2s of the countries, right? That, like their treasury funds and so on. How the money moves around, and so this is called global liquidity. And differently from other charts that you have seen, I'm not superimposing the global liquidity to the price, right? You could do that, but it's kind of comparing oranges and apples, right? What I like instead is offline, doing a graph of the price versus the liquidity, right? And that, again, if you go under my articles, I wrote an entire article explaining how I did that. And then I was hoping for a very simple relationship, because simple relationships are powerful, are much more reliable than some other arbitrary way of connecting dots, right? And because you can always connect dots, there are mathematical ways of doing. And because I couldn't find that relationship, I kind of did that, right? Still, you see there is some kind of nice smooth curve, but what is that curve? So the only way to do it really, or not really the only way, but one of the most common ways is doing what is called a polynomial expansion. So basically, you start with a straight line, then you add a square term, then you add a cube term, then you add a fourth term. If you continue to add terms, like more and more, and each of them will have a weight, you can reproduce anything. I can reproduce exactly every little bump. But the problem with that is when you get new data, because you just fitted what happened in the past. This is probably what many people mean. You cannot predict the future using the past, right? Well, if you do it in that way, where you add so many terms that you are fitting every single little bump, it's called overfitting. It works only with past, and it doesn't work with the future. The entire idea of finding finding some fundamental pattern, is that that pattern will likely continue in the future if it is a real signal, if a growth follows that pattern. And this is what the power law is supposed to be. But there is not such a simple relationship between global liquidity and price. So we have, we kind of do the best with what we have. So hopefully I kind of truncated that expansion to where maybe there is a signal. And there is an identity in that way is that now we have this purple line that represents what the price of Bitcoin should be if it depended only on liquidity, right? On the relationship with liquidity. So right now, for example, the price is supposed to be $38,000. So the real price is overvalued in this model, right? And what is this? Why do I do that, or why this is relevant at all? Because when you have a model like this, you're trying to find, is there any particular pattern that held in the past that they can use, to make sense of what is going on right now? One of these patterns is, it looks like every time we had a bubble, like here, for example, we had more liquidity. The liquidity model kind of overestimated the price of Bitcoin. So that meant there was ample liquidity there. If anything, the real price was too low. And kind of makes sense, right? Because you want to have a room to grow, right? This is what it means, that there is enough money around to be invested in Bitcoin. And then you can see here this idea and this interpretation of the data is supported by the fact that when we came close to a peak, because of this thing is mostly driven by FOMO, right? That will be the understanding. The liquidity didn't follow. It was following here, but it didn't follow there because it had not really fundamental value. It was at that point, it was all craziness, right? Just people trying to speculate and joining. And this when your grandma calls you because she wants to buy Bitcoin, right? And it's kind of cool because if this pattern continued, even now, we could have used this as almost like a way of telling in advance where we are in a too much hot territory. And you can see this pattern has been true for all the bubbles, right? Green area here, red area here, correction, But I was surprised, first of all, we can explain why we have this red area here. Again, remember, we were supposed much closer to the bottom. And then the ETFs pushed the price up. So kind of went above the purple line. But all right. And then we had a correction. And I was, smiling at this because I said, you see, this actually is a useful indicator because it's showing there is a correction, the liquidity is building up. And so this is why I draw these lines, right? We are going to cross somewhere. And then we are going to see the same pattern where the liquidity goes up, the price goes up, then they cross again, right, in the other direction. And that was happening for some time, and then it didn't. When they were supposed to cross, they actually didn't. They went in opposite direction. This went down, the volatility went down, and the price went up. And since this happened, I have always said, and sometimes people were critical of me saying this, well, it's not very bullish because I would like to see the liquidity following the price. And the main question is, okay, the price went up, and probably we know who pushed the price up. Maybe there are also some hidden actors, right? There are all kind of rumors and whatever, maybe nations buying or whatever. But we always go back to the data, right? The data show the price went up. Sailor ETFs, maybe we are pushing the price up, but from the result, seems that something happened, but not enough, right? Because we are not yet in this super bullish behavior that we expect during this 1 year bullish market, right? We have 1 year to do that. And it doesn't look super bullish. So what is going on? That is the main question, right? Maybe because we don't have a large liquidity, and some people told me, oh, we don't need, when we were very excited about this, we were saying, oh, we don't need it. Who cares about liquidity? But maybe my concerns were correct, right? Because yes, we push, then we kind of moving sideways, right? Or at least following the power law. But like I said before, it's great, but we are supposed to do 2 times better than that, at least. And so, the good thing though, and I don't want to get super excited yet, because you see here we was this bump. When that happened, I got excited and I was talking about that, and then the liquidity continued to go down. It could be a momentary bump, and then we continue to go down. One thing to notice, I don't know if there is any significance with that, is that we rarely go to that yellow line. The purple line almost never goes to that yellow line. So maybe that yellow line does represent some kind of limit, and this is why it's turning around. Let's see what happens, right? Is it continue to go up? Will continue to go up, and will that be associated with the price going up? Or maybe we need a correction? I don't know. It will take a long time to catch up, but at least I would like to see them moving in the same direction. But again, it's something to be understood and interpreted, right? It's a big question mark. We all focus on all these relevant data, this important information that we are trying to make a picture out of it. But these are the main things to report. I think I will leave the last 5-10 minutes and answer questions. It's okay. I'm going to look at your questions. All right. Okay. Yay, Friday night Bitcoin physics. Hey, Fidget, nice to see you. Bitcoin, yes. Physics, I doubt it. I don't know why will you doubt it. We are trying to, it's not physics in the sense that we are talking about planets or etc. But it's a system, and we are trying to use the tools of physics. And people have used these for a long time, understanding cities, understanding social phenomena, understanding markets. So this is what we are trying to do. We're trying to use this tool. We are avoiding other things that people use. That, maybe people don't know how to discriminate, but we are talking about these power laws that are something that are used all the time to understand these critical systems. We're talking about exponential decay. That is another thing that you observe in physics. We're trying to avoid the TA, the technical analysis, that I think is very much similar to astrology. We are trying to think in a more systematic fashion. Periodicities and other things that we are interested in physics, how to classify them, how to understand them. You mentioned perform a Granger causality test on hash rate and price at lower prices, and our hash rate leads suddenly. Yeah, I have graphs of that. I don't know if we can make actually a trading view indicator out of that, because I'm trying to keep these Friday discussions on the indicators, because I want people to use them. In fact, you can see below how to join our channel, how to get the indicators. I want to be like useful tool for people. But we can add discussions like that too. The Granger causality is supposed to show what leads what, right? Because we do have an indicator that actually, let's see if I can find it. I just submitted. We are supposed to get this one of a new indicator that we are going to get. It's this one. So basically, part of my research is to show that also addresses and hash rate are power laws, and you're seeing this here, right? The main question is, how come they don't go along the red line, right? yeah, the red line, actually, you will get a red line if you combine how the hash rate changes in time and how the price responds to hash rate. Here, what I'm doing, I'm taking directly hash rate, I'm making a model of it is a power law, the power law relationship between price and hash rate, and then I'm using directly hash rate to create a model of a price. Like if a price depended only on hash rate, what will be the price? The price will be $40,000. It's kind of interesting because it's the same, close to what the liquidity model says. The actually, I wrote this. I should do the other way around. Sorry for that. The coloring. This one is hash rate, and this one is addresses. Okay. So you see underneath that, I don't know if you see it, but okay. Let me zoom in. You see this purple line that is addresses, and they kind of come close to similar value, right? So one possible interpretation is that if it was due only to addresses and to hash rate, then the price will be overvalued. Price is overvalued. But maybe there is some other component that makes the price be there that is only due to hash rate and address. There is the power law. The power law goes so far, right? Because it shows a long-term trajectory of hash rate and price and addresses and how they are related to the price, that are power laws. But there is a specific power law between price and time that is almost completely explained by these things, but there is some additional stuff that is not included in the model. This is why we have different models, but these are useful because they kind of give you maybe a lower boundary, right? But cannot be lower than that, because then actually you will go against the production cost, how much it costs to produce Bitcoin. It gives you like a kind of lower boundary. But one interesting thing we could do, I'm just going to think, TradingView has a lot of limitations. We don't have to do it with TradingView, but the beauty is that I don't have to recalculate it every time. You can open the chart and it's done continuously, right? And so it's also and if people want to use it, then can get the indicator and use it. But let me see if I can use the calculation of Granger causality to make actually an indicator that will tell us what leads what. And when I did it offline, it turned out that during bulls, it's always the price. So when people say, like Max Kaiser, oh, hash rate leads price, it's not true. Most of the time it's the price that leads hash rate. And there are a few times when that is not true, that is the bottom. The bottom is the other way around, where the price is basically exhausted and nobody wants to sell anymore. And then also the miners don't sell. And that creates a correction, right? The price corrects itself because it cannot go lower than that. And then the hash rate starts to pick up again. And that leads an increase in prices. It looks like the price is also going up from that moment on. What happens in a very narrow region at the bottom, where the hash rate seems to lead, changes in hash rate are before changes in price. And at the top is always price. It's all driven by price. Price is kind of disconnected with the other things. But yeah, it could be cool to make an indicator out of that. Okay, let's see. I can answer the other questions. Yeah. You think the MicroStrategy power law to 1.3, we can look at that, we do have an indicator for that. We have this model where basically, so the blue line is the real price of MicroStrategy, and the orange is our model. And you see in the past, the model, what is the model? It's a power law. It's a power law where the price of MicroStrategy is related to the price of Bitcoin with the power of 1.3. And for some time, it was a fantastic model because it reproduced almost perfectly. By some time, the model was higher, sometimes lower, because these what models are not perfect reproductions, right? And you could, but it will have been actionable because when the blue line was below the orange line, it meant that the price was basically undervalued, and vice versa. Here in this place was overvalued, right? So it will have been a cool model because you could have sold here and bought there, right? And will have been good, right? We will have gained relatively to Bitcoin. Then at a certain point, this was around March, we kind of left the model, and it was okay, right? Maybe it's okay when it has like a sudden jump, and maybe when it kind of continues to follow, maybe corrects, whatever. But then there was a time when everybody went crazy, and Sailors is not doing that anymore, but it was like appearing everywhere. And you remember that period where everybody was going crazy about MicroStrategy, and the irresponsible long MicroStrategy channel had videos all the time, and they were super bullish, right? And this created a bunch of FOMO, and MicroStrategy started to become exponential. It started to do its own thing. It's not even like a just a little bit higher evaluation. It completely did its own thing. It was going exponential, and then even more exponential. When you see straight lines, it means exponential. It went exponential, even more exponential. And by the time, if you follow my updates, I was telling exactly like this. I say, look, this doesn't look good. We are going to have some kind of a correction, because when you go too exponential, it's just how things work. You will have a correction, and we did have a correction, right? And now, if you look at the two model, there is still this gap. So right now, just to give you an idea, the model predicts 1.96, while the real price is 357. I'm not much worried about it constant. We can fix it. We can shift the model to start to replicate more, right? Evidently, something happened that disconnected the two. I'm more worried about the general behavior, right? The changes. In fact, we could make an oscillator based on that. And just by high, it's difficult to compare because we will have to superimpose them a little bit better. If anything, right, there is this correction here, while according to the model, we're actually going up, right? But roughly, they seem much more comparable, right, than when we went through this period. We're kind of disconnected. So I need probably to update this model to correct for this gap. I need to think how to do it. But maybe we go back to a regime where the model actually works well. So we will have to see. But yeah, so MicroStrategy is no Bitcoin. I think it's more easy to manipulate MicroStrategy than it is easy to manipulate Bitcoin, even if the two are related. There was a lot of speculation here. Yeah. So we need an update of this. But in general, after this correction, it seems that we are following again a much more close relationship between Bitcoin and MicroStrategy. Okay. Let's go to the next question. Okay. Hi, XX Frenzy, because it's one of our most loyal followers. Talking affair and now relates to the bubble. Yeah, I don't know about it. I saw a chart where it was very clear that this large event was associated with that. I need to explore it more. I downloaded, I bookmark some pages that were discussing this when actually it happened. I think it was more like 2019, right? Um, and the relevance today is that they decided to sell because at a certain point it seems China uh, confiscated these coins and they want to sell them, or they already did. And I want to understand both events. I want to understand what happened because it will give us some insight of what it takes to leave a power law, even just temporarily, when we are not supposed to leave it. And so I want to explore it more. I just don't know. I just saw some charts that seems more than just due to chance relationship between the two things. And I find it curious because I was asking for a long time to everybody, what is this event, right? It has to be something very strong that change the price. Can we figure it out? And then I saw this graph and I say, this looks like, right? But I'm going to explore it and maybe next time I can report to Big Cow. Give me time to understand it. I don't want to talk about stuff that I didn't study or don't understand it correctly, so I want to take the time to understand it. And he follows up, say maybe this is what they mean when they say Bitcoin's price melts up even when local liquidity drops. Maybe this is what they mean when they say Bitcoin price melts up. Can you elaborate on that? I don't understand what you are trying to say. Evidently, recently there was a disconnection between the two, right? But it seemed more like what happened at the tops, because you can explain the disconnection between liquidity and price at the top as just FOMO, right? That kind of makes sense because maybe what happened recently and we went up like that was also FOMO, right? It was another type of FOMO based on the ETF. People kind of overestimate the importance of the ETF. We are very fundamental because it's another of these events that is necessary, right? We need to go from retailers to large investors, institutional investors, and finally it happened. But people made it much bigger deal than it was. It created FOMO. We pushed the price too far. And this is why there is this disconnection with the liquidity. But something else happens because by this time, almost every time, we started to have an excess of liquidity, right? Partly can be explained by us being too high relatively to where we should have been, but also the liquidity seems to be lagging, so we will see. Does liquidity have any unity? Usually, if you focus on one country, it's basically whatever currency of that country is, right? So dollars or whatever. Now, if you use many countries, you can always convert, right, whatever currency into dollars, right? You don't have to use dollar. You can express it in any currency, but there's some kind of monetary value, right? And then basically is the total of this monetary value. But usually, because of the dollar is the the international currency is converted back into dollars, right? So you will have to take, let's say, you have this Chinese bank. When you get that, for example, in TradingView, you get that measure in terms of yens, right? And then you will have to say, okay, what that corresponds in dollars, because you need to compare apples to apples, right? And then you sum together. Now, the limitations of my model, beside that fact that I don't know where to cut the expansion of these terms, right? Is it the cube? Is it the four, right? At some point, you say, okay, there are methods like if your constants became smaller and smaller, right? So your weights became smaller and smaller, you stop, right? There is no need to add more and more terms. But one of the problems with my model is also the fact that I'm considering all the contribution equally, and it's possible that you know they are still proportional to the economies of a country, right? But maybe the yen doesn't have that strong of an effect on Bitcoin than the dollar is. Also because many people cannot buy Bitcoin in China. Some people maybe go through the regulations, but they don't. Many people are forbidden to do so. Um, so one thing I say that I will do, but again I didn't have time, is to go back and make a model that includes the weight. Because if there are mathematical way of saying, okay, given this relationship and adding all these components, what is the most likely weight for the yen relatively to the dollar or whatever, right? And so I need to do that, and maybe we get a better model. But it should still work pretty good. But yeah, the units are basically dollars once you convert everything to dollars. Will you talk about what happened with Plus token affair? I don't know. I'm just saying that I think the two are connected, and like I say, I'm going to research it. Maybe by next episode, right, next Friday, I will know more and I can tell you the story because it's interesting. And particularly if I say they are connected, I need to have a stronger case, right? So right now, let's say it's a candidate, right? So to be consistent and be scientific, we should say it's a possible candidate. But let's see if we can make the connection stronger in terms of what happened, maybe even getting the data. I don't know what kind of data I can get, but maybe there is a way of making the connection stronger. So give me time until next week. Let's see what I can find. All right. What is the best way to get exposure to Bitcoin? Uh, I don't know what you're asking in terms of investments. So if you're a new and you want to be exposed to Bitcoin, uh, I will try. If I wasn't you and you are new to Bitcoin, I will try everything. I will try a little bit. And today is so much easier. Believe me, when I came in, there were very few options and it was complicated, right? It was very difficult. My girlfriend just told me, "Oh, I wanted to buy," not just told me, but told me many times, "I wanted to buy Bitcoin early on because a friend told me." This was all the way in 2012, but I didn't know how to do it. Because few things were coming up like Coinbase, etc. But there were very few choices. One thing I can suggest you, get Cash App. Cash App, for example, for somebody that is never learn about Bitcoin, Cash App is very good because you can transfer easily money in the account. You can link it with your bank account, and it allows to buy real Bitcoin that you actually control. And it's not the most secure app or whatever. I don't know about the secure, but it's there are more, let's say, um, serious way of buying Bitcoin and holding Bitcoin. Like you should learn how to do it in such a way that you have a wallet that is not connected to the internet. But in the beginning, if it is few $100, just it's like one of these things where you want to dip your toe, and once you do it, right, you get used to it. It's now this big deal. I thought it was a much bigger deal, right? You get exposed little by little. Then it becomes normal to you, right? Same thing with the power law. People that never heard about it seems so difficult, maybe strange, etc. Little by little, it starts to make sense. This is how we do everything, right? So get Cash App, for example. Maybe other people can give you other suggestions, but that will be my choice. Or Robinhood, right? Robinhood used to be where you were getting just indirectly the coins, but now it seems actually if you want to get the coin from buying them on Robinhood, you can get them out. But even better, I think, is Cash App. Buy a little bit, like $50, $100. All these things about self-custody, you are self-custodying, but they are on Cash App, right? And I will not worry until maybe you reach a few $1,000s, right? And then you can worry about and learn because you want to prioritize, right? You want to learn about self-custody. It's for sure because it's very right. You need to learn about self-custody, right? He commented on that because it's part of being a Bitcoiner to learn these things. But in the beginning, I will not get overwhelmed, right? Do learn one step at a time, one concept at a time. Study Bitcoin, learn about Bitcoin. Sailors are, look for a Sailors University, has very nice lecture. There are so many videos. So one step at a time. But I will do that. Now, today, in fact, a Cash App allows you to even to do that. We have all these other things that are around Bitcoin, like, for example, MicroStrategy. If you don't know about MicroStrategy, learn about MicroStrategy, study what they are doing. Buy a little bit of MicroStrategy too, because it's part of the Bitcoin experience. If you had to go and wanted to, I would say 10% MicroStrategy, 90% Bitcoin. Buy a little bit of Bybit, even just to say, oh, I know how to buy it, I know what it is, a little bit. Because, for example, I have an IRA, and they don't allow in this IRA. I'm sure there are IRA that allows to save Bitcoin. By the way, I need to learn more about that. But they do allow to IBIT, and they allow MicroStrategy, at least on Cash App. So that could be an exposure that allows you actually to save on your retirement account. So explore all these things, right? I don't cover much of these things because I'm focused more on data analysis, but maybe I should do things like that too. And at a certain point, maybe we can have an episode where we talk about all these tools that we have available. But there are a lot of people covering this topic. But one bottom line is get exposure, and get exposure now, today. Don't wait, don't do what I did. The first time I heard about Bitcoin, I downloaded the wallet, was in 2010. I wanted to mine. I thought it was a little bit too complicated. So I'm going to do it tomorrow. With Bitcoin, never do that. Never say, I'm going to do it tomorrow. So even you ask this question, go and get Cash App today and buy $100, whatever you can, of Bitcoin. Okay? Do it today. Don't wait. Do it now. Okay. Joe, can you update my indicators in the Discord? I mean, sure. I will do it. This is how it works. Basically, everybody that is in this insider, it's through Patreon, because we are trying to do it as ethical as possible. This is my living right now. It's my job. So you get the indicators, you get in our Discords. It costs $20 a month. It's very inexpensive. And I made a promise that I'm going to make more and more indicators. Like I say, right now we have 12 of them. And if I add more indicators, the people that are in the program don't have to pay anything. They just come on the Discord and say, hey, can you update me? And then I update them. It's also a way for them to show me that they are still active and alive. And it's going to be free if you are an insider. I'm giving you the latest indicator that we made. It is that nice bimodal indicator. That is our latest one. So he's asking me to update. We updated a lot of people, but he's trying to remind me. Okay, I will do it in Turkey Space. Hopefully you have it by tomorrow. All right. Okay. I will not comment on that. But in general, he's a great guy. I think he is a good force in the space. We don't always agree on everything. I will say it's not worth it. I have to say, honestly, it's kind of human to think independently from the side benefits. You can play with things, but you have to be a little bit careful, because you can say, oh, I did an experiment. I wanted to make a point, right? Let's say I make a coin because I'm so tired of Trump, etc. I want to show the world that anybody can make a coin, right? And then there are consequences. Well, we know, because in the end, there are always winners and losers, and some winners, some losers. It's the same thing when going to, to Monte Carlo or Las Vegas or whatever, right? Okay, throw a couple of $100 and see what happens. And if you go, I'm having fun anyway. But it's not like that for everybody, and and it's exploitative a little bit, because even the casino is, because if everybody had that attitude, okay, fine, right? People throw $200 for stupid things anyway, and if you get some fun, if it is social, the conference will be at Las Vegas, I will be there, and I don't like gambling, but if I am with some friends and they gamble, sure, I will throw $100, making sure that is it. If I lose it, I lose it, and I don't try more. It doesn't matter, even if it was a billionaire, that will be my attitude. This is how I am. But there are people that are addicted, and they spend all their savings in doing things like that, and it's very sad. And if you create something that can push people in that direction, and then you are an influencer. I'm not talking about Fred, I'm talking about myself. I would not like to do that, even if, and I know it sounds not completely believable if I say, even if I made $100 million, right? Because maybe there is a price for everybody, right? I'm not sure I would like it at all, because it's not coherent, right? And I care about, it's a kind of a very incredible honor to have people that follow what you're talking about. Like, you're Friday night and you're here listening to me, and you do it probably because I don't say trust, because you should not trust anybody, but you have some respect for my understanding of Bitcoin and my positions, etc. And I don't like being absolutist on anything. And so it's fine if you want to play with meme coins, but that is a private thing. You should not use your public position, whatever that is, minimal as it is, because none of us are superstars or presidents of the United States, but it's still something that you should not abuse. That is what I think. It's a form of abuse. It's a relationship, right? We have a relationship between you and me, right? Between a content creator and you guys, and it's a different content creation, right? It's not entertaining content. It's based on knowledge, and important knowledge, like finance, right? So we are talking about freedom and getting out of the matrix, and then we create matrix traps, right? So I don't like it, and this is independent of a judgment of Fred, because I don't want to judge him or say anything negative about him. I'm going to say simply, I will know. And I was tempted. I had actually friends that told me, why don't we make a power law coin? And of course, being a human, there is a little, it will be very, not true. And, I will lie if I say that for a small fraction of a second, I thought about it and even come up with, I will justify in this way, I will justify in that way. But you cannot justify it. And I care about my relationship with my audience more than these, temporary gains, So that is my position on that. And I will refrain from judging the person. This is a question that comes all the time. To talk about coherence, if I am coherent with the theory, I will have to say no. And Sina actually came up with a post recently where he went through a more scientific discussion of this topic, basically coming up with how big the reserve can be, how much of an influence, right, an inflow of cash we need to actually push the power law away from its trend. And you can see, short of adopting Bitcoin itself, where a nation say, we are going to use Bitcoin as the standard, we are going to peg it to the dollar. So that could be a phase transition change. In that point, there is no power law anymore, right? We go to a completely different situation. Short of that, I don't think basically anything can change this path, and it's going to be more and more difficult. It's just that maybe a better question is, where the strategic reserve comes in this scaling, where we went from very few investors to larger groups to banks to large institutions, even larger investment firms, and then states. I think it's part of this scaling up, and it will not change the behavior. Again, it could be temporarily, where if there is a serious action, maybe the bill passes, people will get very excited. Temporarily, there will be FOMO, it will push away from the power law, but then it will come back. I don't think long term will have an effect at all. That is, but it's an hypothesis. Let's see if that is true, right? This is our approach. We are trying to be scientific. I don't understand this. Okay, what has surprised you the most about the cycle so far? Okay, I thought you were asking something different. Sorry. So Philip's asking, what has surprised you the most about the cycle so far? Mostly the liquidity. Yeah, the liquidity thing. I was really counting on the liquidity coming down. I mean, going up in that way, the price correcting, and then I thought that pattern. But this no, the power law doesn't say anything about that. When you say, oh, this is a failure of the power law, not true. Doesn't have anything directly. It's something that we are adding, to try to understand better, right? It's one of these tests. Okay, I order a new test for the patient to try, something new that we never tried before, and the test comes out weird, right? Oh, wow, what is going on here? That is a component that is weirdest, that is, I don't understand it. This is why I put the question mark. I don't know what is going on there. So that is a surprising thing. But let's see, maybe it's simply that it's delayed and that turning around is real, and we will see climbing, the liquidity climbing. So, they don't have, the cycle don't have to be 100% similar. By the way, I wanted to say there are many ways that people compare the cycles. And I'm going to write an article on that. I'm strongly against the idea of comparing just in terms of percentage, because if you don't subtract the overall trend, you're going to get nonsensical results. Like there are a couple of sources where I see they're claiming, oh, we are doing what we were doing in 2017. I don't know how they can claim that. The only way they can claim that is without considering the power law growth. As I just said, by power law standard, we are already there. We are already kind of midway from here to where we are supposed to go. But in 2017, we just barely left the bottom. So you cannot compare these two things. We are very different. And this is why it's so important to see everything that happens to Bitcoin through the lenses of the power law. If you don't, you're coming up with weird conclusion. Because if you take seriously, if you take the comparison seriously, maybe you see what I don't want to pull out the particular analysis, but maybe some of you saw that analysis, right? They just superimpose the behavior during the cycle on the basis of percentage changes from the bottom, for example. Then they claim, oh, this cycle looks like 2017. It's ridiculous, because if you take that seriously, the cycle went 10 times higher, right? We went 10 times, something of that order, from, the power law reference. And that will mean really that we go to something like $2 million, right? Or 1 million.4 or something like that. Is this what they are trying to say? That is going to happen to this cycle? It's crazy, right? If they say that. So I don't know how similar in which way. What do you mean? It's just we are using the wrong methods. It's very important to use consistent, meaningful methods. Not for the average person, it looks okay, right? I show a line, it looks like similar to that line. In which way? You're using the wrong metrics. So I think this is the right approach. You subtract the average behavior, and then you see what is left over is what is due to the Bull Run law, right? Not the power law. These, yeah, no, I already commented on this. Why should people believe that Bitcoin power law is real? What do you say to people that dispute it? Many things, right? First of all, there are many things that we have done, not just me, but many other researchers that have shown that is real. What do you mean for real? So all these things have precise meaning in math and physics and in science. There are many tests that you can do. First of all, and they go from complex, right? You can talk, for example, about all the scaling tests that they did. I will write an article. I try to write this article because I want to document in details all the steps, the logic, and so on. And you can read it. There is this entire idea that we can avoid completely to draw lines and look at more deeper properties that are some of the tests that people use all the time to show there are power laws in the data that you're observing, because people take seriously these power laws in other fields of science, because once you find one of these power laws, you found a very deep pattern and properties for that system. So, when Kleber's found a relationship between metabolism and the mass of an animal, they named the power law after him, because it's a great honor. You discover a big, important thing. So it's not something that you can dismiss it. At a certain point, I'm going to publish scientific papers, peer-reviewed papers. Maybe that helps with the acceptance. It is not some random guy talking about random stuff. It is actually something that is scientifically valid. But the beauty of a power law, that a lot of these things you can verify yourself, right? If you, it's required to know how to download data from, from the internet, how to draw a graph using Python, maybe, or other tool, maybe even Excel, and people have done it. Hundreds of people at this point, hundreds of people have drawn the power law, and they have concluded, yes, there is a regression that gives you. So then you have to be a little bit familiar with what it means to show that there is a pattern in the data, right? For example, this idea of regression of R square, that is supposed to be a good test to tell if the model that you are using is a good representation of the data. Just to give you an example, that number is 0.95 for the power law. That means 95% of the data can be explained by a simple line through a log graph, like you're seeing here, right? But beyond all these tests, that not just me, but many other people have done it. And so the people that know their stuff, that are experts, and it's not just a question of expert, right? I don't want to use an argument from authority, but people that know their business, they know their job, because they have done this for decades, like in my case, 30 years, right? They don't have doubt. There is no real serious scientist that can say there is no a power law in your data. They can come up with very technical, arguments, not to destroy the main thesis, but maybe, kind of object a little bit about certain things, like, for example, how to deal with the oscillations, what is the best method to represent them, etc. But the general trend, nobody has doubt, and nobody even knows what we are talking about. I'm very curious to see when I start to send these papers and see what other physicists and mathematicians that we have the job to peer review papers will respond. But I can assure you, nobody will say, oh, this is garbage, because it's not. It's real. And you can verify by yourself. But what I was trying to tell you, beyond all these other things that I mentioned, look at this graph. Look at this graph. What there is to argue? What do you want to argue about? What there is to argue? You tell me, But anybody that want to say yes about the power law, tell me, what are you saying? If anything, anybody that will say something, they will reveal how they don't understand data. They don't understand how to play with data. This what happens. There are many people that have zero knowledge of these things, and they think they understand stuff. I don't know why. It's like something weird about the internet, right? There are these people that they will never go. Let me give you an example. Imagine me going to, some kind of walk-in for some professional football player team, right? I go there. I don't know much about football, but I go there. I am in bad shape. I don't even know the rules. I don't know anything. And I go there and I say, guys, I know more than you, and you do everything wrong. You should hire me as your coach, right? Or maybe actually as the player, not even the coach. Maybe you can have a fat coach, but you cannot have a fat player. Imagine I don't even have a basis, and I go there and I argue with this guy. These guys will probably beat me up or call security and kick me out, right? Exactly that. This is what is happening here. The people that push it back, they don't even know what they are talking about. They don't take the time to understand it. They don't understand the science. They don't understand the math. It's mostly emotional, right? Whatever the reason, right? Maybe because the power law tells you we are going to 1,000,000, it will take 10 years to do that, right? It's not going to happen the day after tomorrow. Maybe they don't understand how math applies to human phenomena. They those, right? There are all these books that I mention all the time. They discuss how cities are power law, how they grow all the parameters in a city, they grow like power laws. Now, there are many examples like this, and there is nothing to argue. Look at this. It looks like a straight line, period, right? What do you want to discuss? And there are many others way of doing this, right? You can go deeper and deeper and deeper and deeper and do many tests, but they always go back to this. Look, it's a straight line. It's a straight line in a log graph. It's evident. And it should be so impressive and so remarkable that I don't understand why people don't like it, because it's beautiful. To me, it's a beautiful thing, But yeah, what do I say? Study more, study, understand it, come up, reproduce the result, and then when you think you have a valid scientific argument, come, because I would love that kind of a discussion. I would like to have that discussion with somebody that knows what he's talking about, and I cannot find it because there is no such a person. I didn't find yet any valid, anybody that knows their job, that is a real experienced data analyst that can have a discussion that is meaningful about this topic, because there is not. Now, we can go through the technical details, talking about Fred, and at some point we had an argument. I don't know why the argument was there, because he was claiming other things are power law, and you can demonstrate very quickly they are not. Like other, stocks, for example, they follow exponentials. They don't follow power law. You can prove it. The beauty of math that it's not a philosophical discussion. It's not politics. It's math. It can be proven. It can be only right or wrong. There is no really in between. The only time when it's between is about method and details, not the general concept of something is real or something is not. The power law is real as it can be, in the sense that it really reproduces the scaling behavior, the fact that it went from 0.5, even less. The first transaction was 5,000 Bitcoin for $1. Even that transaction falls on the power law. So all the people that tell you stuff, right? And there are some, like, for example, Bitcoin Magazine, right? There is this guy, I don't remember Mark, his name, and he presents himself like, and he's a nice guy, and it's not a criticism about the person, but I don't know his background, but how he talks and discusses. I know he's not a scientist, or for sure he's not a scientist. We spent 30 years of his life understanding data, and a few times I talk with him, he has even an episode where he tries to dismiss the power law. He doesn't understand it. Like, for example, I look at his code, and there were some errors in his code. Independently from that, he doesn't have a context. He doesn't understand what is the relevance of power law, why they are important, why the data looks like a power law. Nobody's coming with an argument. In fact, I do have a couple of criticisms that they could raise on the power law, and I do it all the time in my head. And when I go and actually try to address them, I immediately resolve the issue and say, yeah, it is a power law. It doesn't matter how you look at it. It's a power law. There is no doubt. So yeah, go deeper, study, understand it, and if you think you still have criticism, then come back and let's have a serious discussion, but based on you understanding the topic, because most of the criticisms come from people that don't understand it, that have no the basis. Okay. All right. And somebody made a donation of $2. Thank you so much. But it was very generous from you. I think at least this is what it means. But yeah, the top date. So the idea of a top is that see if you use this indicator, and these are the things where, yeah, okay, there are things where there is some room for interpretation that are basically things like this, right? Because beside the main signal, we have also the oscillations, right? The oscillations that I'm always saying it's kind of an additional component, right? Like, for example, when I was teaching physics, we always, when we explain the fall of an object, right, we tell, okay, but by the way, it's a power law, right? The distance covered by an object that is falling close to the Earth goes with 1/2, the acceleration due to gravity, that if you are close to the Earth surface is a constant, times the time square. And that time square makes it a power law, because anything that relates to another, one quantity relates to another quantity with the power, it's a power law. It's a power law with the power of 2, right? The time cover, but the distance covered by an object as it falls down. So when I was teaching, right, it's customary, because there are established methods of teaching these topics, where we start with no friction. We say there is no friction. It's an idealized situation, right? We live in a world where there is friction, there is air friction and so on. But we make it simple because, first of all, the equations are nice, so we can do calculation, but it's also close enough. It's close enough to what happens if you have a relatively large stones, right? And now if you're trying to describe a fall of a feather, then you have to be more careful, right? You have to have for sure a description of how it flies, right, in the air, how it deals with air drag and so on. But it's complicated, right, because a feather is a complicated object, and it can be done, but it's complicated. So we start with no friction, and then we say, okay, but that actually historically also what happened when people started to understand that they could use this knowledge to kill other people, because this what happened with human knowledge. You can make cannons and then use this knowledge of gravity to calculate how far a cannonball goes and how to direct it. In particular, you want to know the angle of your cannon if you want to shoot some very far away target like a ship or a fort or whatever. And people created all these tables, right, at that time. And if you don't include air friction, you're not going to hit the target. So you need to add an idea on how the ball moves in the air, how it interacts with the air, maybe even include wind and other things. So this is what we do when we add all these other components. So we have an overall growth that is a power law. And then if we want to understand the bubble, we add some kind of a model for the bubble. And my current model is basically recognizing that we have a very precise periodicity. They happen every 4 years. That's why this is what we are trying to do with these sine waves. They are not precisely following the pattern that we observe, but they give you an idea of where they should peak, right? And where they peak usually is, so our general understanding is this, that we can divide the cycle in three components. There is one component where we go up exponentially, there is one component where we go down exponentially, and then a component, right, in this case it was almost textbook example, a component where we follow the power law. What there is to argue there? Look at this, how incredibly correctly I follow the bottom power law. I mean, you can see that with your eyes. What do you want to argue about? Now, you can argue about this, but the result is the same, right? There are deviations. We go back, deviations. The general path is the same. We follow the power law. And there are these deviations. And the deviations seem to happen very close to each other at the end, right? There is always fuzziness in the data. It's never perfect. But within a range, so you can think about like a box, right? Within this box, they seem to happen all the time at the end of the year, of that year where we go exponential. So if you follow the same idea that this pattern should be taken seriously, because Bitcoin seems to follow all these very predictable patterns, and you say, okay, under this assumption, because everything you do in science, there is always some assumption. And the assumption is everything repeats like before. It could be not true. Let's see. So far, we don't have any evidence that we are not repeating the same pattern. If a pattern repeats, then the next peak will be also Q4 of this year, because this is the year, right? If you look at it, right, we had this year where we went down, then we spent 2 years close to the power law, we left it, so we have one more year to reach the top. And that year, at the end of that year, is where usually the tops are. So see how at least it's self-consistent. That is the first thing you should require on any system that is trying to understand the data, right? You want to be, of course, consistent with the data and be able to explain the data, but it needs also to be self-consistent, right? Because if there is some internal inconsistency, it's even worse, right? You can immediately dismiss it. It's not even self-consistent. It's a team of an act. You need to be consistent as a person and as system to understand reality. Self-consistency is fundamental. So if it is self-consistent, then this is what is going to happen. Now, it doesn't have to be because maybe self-consistent, but it doesn't represent reality. That can happen, right? That reality is more complex than you think, or maybe this pattern that we observe doesn't repeat in the future. It happened, it was predictive up to a point, and now things are different. We will see. But you see, this is what I did here, where this is how exactly a scientist will do it. If this was no Bitcoin, like imagine this data from a planet, right? We are getting data from a star, and there is a planet going around the star, and we are getting some kind of luminosity data. This is how they do it when they start, they study all these extrasolar planets, right? Imagine this is light data. We describe how intense the light is, right? And this weird star with the light is growing with time, and then it has this weird oscillation, and interpreting these weird oscillations as maybe there is a planet going through, right? That every 4 years the planet comes and makes the light go higher when it leaves, and see when it goes down is when the planet is over the star, right? Something like that. Imagine that I'm trying to describe that, right? And one thing I will do, but I don't, because I just discovered it, 12 years ago. I don't have a lot of data, right? I have to use what I have. I have only 3 cycles. And then I will say, well, are they consistent? So I will subtract the general trend. I will see how they oscillate, you see, and they say, oh, wow, there is a trend. Because if I average, that is a tool that we will do. It's not something that I invented. You will average these cycles, right? You will average them, and you see there is a pattern. With this blue line is the average. You're going up and then down. That means there is a true signal. This overall, this is another indirect way to show the power law works, because you will not be able to see this nice pattern if there is, if, by subtracting the power law, if the power law was not a useful reference to understand the signal. It shows the behavior of these bubbles, right? So there is a tendency to go up during this time. There is a tendency to go up, down, even for the average. Each single cycle is maybe slightly different, right? But in average, you go down. And then notice this, we stay flat. That is exactly what I say, because if we're not following, if your eyes is not convinced that we are following the power law, this shows it's true. Because again, the average of all these cycles shows we stay flat. And staying flat in this case means following the power law. You see how it works? This is how you do science. It works. And you can quantify, you can calculate, you can give statistical meaning to this, but even the first thing you should always use, not the last, because of course you cannot publish a paper and say, oh, it looks like this. You cannot publish a paper. You have to do all the analysis. But the guidance and the first, we call it a sanity check. You always starts with your eyes. Is my eyes showing me what I think is the real behavior of this thing? Yes, right? I see a pattern. That means the underlying information that I'm subtracting, it's relevant. If it was not, I will not see this very organized pattern that I'm seeing here. So this is the way you treat this. And you do it. This is where the science comes from. If this was data from any other physical phenomena, we will do exactly the same type of analysis. So we apply to Bitcoin. That is, I don't know many people will do that. So this is why it's different, right? Okay. Given we are talking, I'm taking this last question and then we can meet next time, right? We went beyond the 1 hour that I say we were, but evidently people are still following. So hopefully there is some interest. Let's take this last question, then I will go. I think I know this guy, Blue the Big Cheese. Given we are talking potential future tops, can we comment on clock cycle, projected top, phase amplitude time, dominant cycle, determine? Yeah. So there are many methods. The most used method to find periodicity in data that a real scientist will use is this FFT, that means fast Fourier transform. And I did it. I did a Fourier transform of a data, and what it does, right, it gives you basically, you go to this space, it's called the frequency space, and what it does, it gives you a value for each possible frequency, right? So basically will be the inverse of a period. So if you're looking at 1 day, it will be 1 over 1 day. If you're looking at 1 week, it will be 1 over 1 week, over 1 year, right? These values that are the frequencies. And then it gives you an amplitude for that frequency. Basically tells you how strong of a component that oscillation, because you can think, basically this is another mathematical theorem. There is this guy Fourier that shows that you can reproduce any signal, doesn't matter how complex it is, with a bunch of sine waves. You start with a sine wave with a certain frequency, adjust the amplitude, then you add another one with a different frequency, adjust the amplitude. You can add more and more and more. You give me the most complicated signal you can, I can reproduce it. That is the principle between our voice, right? Because our voice, or even the computer sounds, etc., right? That, this is how we can reproduce anybody's voice, right? Right now with AI, can reproduce it almost perfectly, because basically you can decompose the voice as a sum of different frequencies that have different amplitudes. Some of them will be bigger, some of them will be smaller, right? If you're a man, you will have a lot of low frequency, right? If you're a woman, very high frequencies, but you can basically decompose it. And then you can reconstruct any signal perfectly with every single little detail by adding more and more sine waves. The idea, though, if there is a real signal that is significant, it will be dominant. You will see a spike, right? You will see a big spike, or maybe if it is because in real data there is it will have to be a very annoying, precise, perfect sine wave. If you hear it, it sounds almost like a like a mosquito. But if it is like a little broad of a spectrum, you will see something like kind of it has some width, right? Like a mountain. It will look like a little mountain, and it will have a peak, and that peak will be associated with a dominant frequency, and that is like one of the most important oscillation that you see. So if data has some strong oscillations, like here, you should be able to do this Fourier transform. Our day computers can do that. It's a mathematical calculation, and the result will be this. It's called a spectrum. It's very similar to the light spectrum, right? The different colors are different frequencies. You can take the light of an object that emits light or reflects light, and you can decompose it in frequency, right? So this is called spectrum. And if you do it with Bitcoin data, you see that very strong line that is associated with the frequency that is 1/Fourier. It's there. You can try to do it yourself if you know how to do a Fourier transform. It's clear, but it's a very strong Fourier signal. It's only 3 oscillations, so it's not super strong because it's only 3, but it's there. And so you can use that. But see, sometimes using your eyes is as good as doing sophisticated analysis but this method, you see, there are many ways you could have measured many days, right, from one peak to another, come up with, it's kind of close to 4 times 365. But see here, I'm aligning them, and you see they are the peak are all kind of aligned, with some uncertainty. So you can assume that there is a Fourier oscillation. And this is what my model does, right? Look at that almost signed type of frequency, and it does a good job in recovering the peaks, right? And it's a perfect Fourier cycle. So many times you don't have to do sophisticated things. You can do sophisticated things that it's good because, you show that it's real, even using the sophisticated tools. But many times I like my method that is kind of like many physicists may approach, because physicists are a funny group. They are between we know the rigor of a mathematician. If you want to make a proof that is as detailed and as rigorous as a mathematician, we know how to do it. But we also understand the engineer, where I need this thing to fly. I kind of need to know the physics, but up to a point. I don't need to know quantum mechanics if all what I need is just, Newtonian mechanics, right? I can make this airplane fly. We are in between that, right? We can understand both ranges, something very practical and something very sophisticated. I think it's the superior science, physics. We are better than both groups. But, it's unbiased. But I like to go both directions, do the sophisticated things, and then go back to the data and say, aha, it makes sense. Look, they align. I don't need Fourier. They kind of match, right? So you want to do both. You want to go back between sophisticated tools and then sanity checks like this, right? They need to align if this is a real periodicity, and then trying to superimpose them. But you can do that. Now, the sophisticated method then can give you more things. It can tell you if there are additional oscillations that maybe you don't see with your naked eyes. It can calibrate the height of the amplitude of the oscillation. You can get the phase. I have to be honest, when I determine the phases here on this pink model, I kind of did it by eye. I kind of align the first one, and then I say, let's see how the other ones look like. I change it until basically they match. In fact, actually, in the in the indicator, that is one of the things you can play yourself. Again, because there is so much noise, and these are not perfect periodic oscillations, that you can do it with a more sophisticated approach, because it will give you what is called the phase. It will tell you where to pick that, where to put that oscillation correctly mathematically, but you will get a similar result. So that is my approach. You can do it. You can go deeper. If I publish the paper, when I publish the paper, of course, I will use all the more sophisticated, impressive tools. But if you want to do something that kind of works for this purpose of telling us where we are in the cycle, I'd rather do something that I can play around myself, right? That is based on intuition more than super sophisticated calculation. So that is my approach on that thing. But yes, you can do all these things, and there are people that have done it. So people show me some beautiful Fourier transforms, or maybe using wavelets, and blue cheese. If you're interested, we can explore these things. I don't mind. We can play and go deeper and explore more and more and more. I'm very interested in now. There is all this topic about basically scaling variance, showing that if you look at different scales of the power law, I already did a lot of work there, but I want to do more, like looking at different scale and show that the power law exists, right? I have this very cool indicator where basically I call it the field indicator. And then really, we are going to stop here because I actually didn't have even dinner. Let's see if I can find it. How to select just the one that I want to show you. But maybe next time. Let's do that next time. But basically, what the indicator does is trying to fit a power law for every single day. And the cool thing that if you calculate these power laws for every single day and you show the distribution, they are not going to be all 5.8, whatever the power law is, right? They're going to go in a wide range. But guess what? The average of all these little power laws, it's the power law. It's the single power law. It's that 5.8. So one way of understanding what the power law is, with a statistical property that almost every day we tend to be following this power law, but sometimes we deviate from it. But in average, we follow the power law. So it's kind of a statistical scaling property of a system. And I want to go deeper there because there is a lot of interesting things that we could learn. But yeah. So anyway, guys, thank you so much for all your questions and all your comments. You can always DM if you want to go deeper in something and you want to explore it. I would like to see more and more people exploring these things and making their own model. I'm going to be critical at times when you do things, but it's not personal. I want to understand Bitcoin better. So, but yeah, I will be great if more of us are doing these explorations. All right, thank you so much, guys. I will see you next week, and hopefully the liquidity turns around and we see a proper bull run. All right. Good night, everybody. Bye.